Good evening, all. Ira Epstein, and here we are on Wednesday, November 3rd, 2021, and it's the evening market wrap-up for your SPDR ETF videos. And what took place today? Well, first of all, you know I'm not in Chicago. I'm on a beautiful Cabo San Lucas, enjoying myself in a veranda at night. The hour differences, so I'm in the 6:30 time frame. I know it's 8:30 at home, but folks, I'm on vacation. At least I'm putting out updates just about every night for you. Let's talk about what the Fed did. Not a surprise. They actually took the low road. There were talks they might get a little more aggressive on the tapering, but they're not. They went with $10 billion taper out of the Treasuries, $5 billion out of the mortgage-backed securities. That takes them to June of next year when it would end. And let's understand what tapering is. Tapering is you're putting in less money as you go. Money is still going in, so the market's accommodative. The market is going to have to judge just what that means down the road, but I don't think you want to jump too soon. Remember, we are here now in November. We're going to have the flu season. We're going to have more bouts, as you know, of the COVID, even though children are being allowed at this point to get their shots with the Pfizer. Moderna hasn't been approved, and we don't know how many parents will let their children get the vaccine. That's going to be the first thing that you have to deal with. And it's going to go on and on. I mean, there's quite a bit taking place. But what the Fed did is interesting in the sense that they did the tapering. Now we have to see the reaction out of Asia. I call it the yin-yang impact. When we come out at 1 o'clock in the afternoon and make an FOMC announcement statement, and then you get the press conference at 1:30 Chicago time, Central Time. Think of what time it is in Asia. They're asleep. European markets are already closed. 5 to 7 hour difference in most of the European countries. They're done. People have gone home. And while I know traders think that, in the evening session it's very aggressive for them, it isn't. When Asia wakes up, you'll get your first impact. Then it will roll into Europe and come back to us in the morning, and you can get very different reactions than you went home with. What do we have? We have all the stock indices still in the green today. The market liked what it saw. Excuse me with that. That if I go over these, I'm on my charting software here, and if I roll it a certain way, I can trade right off of it, which would not be good, but I got it set for paper trading. Tesla, look at this. Ever since the market came out here, it hasn't stopped. And you know what Elon Musk did? Come on. He goosed Hertz the other day, and he said, sign the contract already. I don't need to even read a newspaper. They're signing the contract. That's why you're back up. $40 today, 3.5%. They're going to take it. If they don't take it, Avis wants it. Others want it. They'll take the deal. When you look at the swing line, higher lows, higher highs. So until you take out this low of 1146, you have a market that's got a pattern of higher highs, higher lows. It's far away from all the main moving averages, and they're in a bullish setup. You have the 18-day average of close in red. In green, you have the 100, and in gray, the other. You've got the lowest, at the bottom of the market, the longest term average, then the 118. It's a classic bullish setup. You had crossovers galore taking right here, and the market went for the highs as the 100 crossed over the 200-day average. Now, staying over an upper Bollinger Band, to me it's a sucker play that you buy over that. But the information doesn't mean you have to drop much, and that's what I think people don't get about Bollinger Bands. When you get one of these vertical price rises, it's repricing the market. It's come out of basic tight ranges. You see them all through here as I'm hitting the cursor for you, and the market takes off. I don't know where this market's going to. Don't pretend I do. You go to the weekly chart for that, and I'll show that over the weekend to you. In the slow stochastics, you're fully embedded. So as long as you stay fully embedded, it means that breaks in these markets to a key moving average, which I show in my morning subscriber video to my paid subscribers, is where the market is being bought, in my opinion. In Apple, you have a pattern of a higher high, lower low. First thing I say is it's neutral. Second, if we watch the market right through here, what did it do? Follow me on the left. You lose the embedded reading and you then get it back. When that occurs, that means you're often headed back to the 18-day average. But this is when the market take a look. This day, you fell back to the 18-day average, but you were still embedded. It all happened after that. You could easily get another slippage in this market. On Cathie Wood's arc, the market embedded. You have now 3 of these days in a row over this number. Target, upper Bollinger Band. I think the pros will buy the market now back at here. The 200-day average, looking to see if they can kick the market up to there. I don't think they'll buy the market if you first make a higher high than today and then fall back. In the industrial sector, this is just noise. As long as this stays embedded, the pros are buying this. I look now for this market to get back over 105.23 and make a run for the upper Bollinger Band now. I'm wrong if you lose with the red line here, a reading under 79. Is that sticking my neck out? Doesn't mean I'm saying buy it. That's what I think is going to happen. In the semiconductors, still up and away. You know, what can you say? You've got a 2-year backlog in semiconductors. Everybody wants them. There's pricing power. And what this market does is it gets over the Bollinger Band, then back under it just enough, back and forth, making it difficult for you to be a hero with it. But it's just a power play out of sideways action that's carrying the market. In CNBS, the cannabis stocks, to have an idea that we're going to bottom, you got to get away from this embedded reading. So you're going to have to do 2 things. First, lose that. Second, close over the 18-day average of closes of 1808. That's going to take some work. I think the pros will sell the rallies until that occurs. In the home builders, they didn't even blink at the idea that higher interest rates are coming. Be it mortgages, the refi numbers, whatever, the market's not concerned. Probably headed to 80.12. I'm wrong in my thinking, only if the market loses the embedded reading, which it now has. And yes, if you don't take out today's high, think on the breaks, the pros buy it. Energy sector I have said to stay away from, and I did that just before I left Chicago on this vacation. Why do you want to go into the OPEC meeting? Why would you want to go into the COP26 meeting, which is now ended? The president is headed home. The Democrats have their hands full trying to get anything passed. They're at a low point. The president will say that the loss in Virginia, it has nothing to do with him. It has everything to do with him. EEM, the emerging markets, lower highs, lower lows, too oversold to want to go short. I wouldn't touch that. And in gold, all right, gold today has to deal with the idea that interest rates are going up over time. Now, they're not necessarily going up today, but the market will decide what the curve yield does. The trend is down. The market is not in oversold territory. You have to have a reading here under 30 to do it. Could it reach down for 163.99? Yes. On the way back up, an awful lot of resistance between the 18 to the 200-day average. In the gold miners, if gold's in trouble, well, the miners are in trouble, but they're too oversold. I will tell you what I told my paid subscribers. They're oversold to the point here in the Canadian gold miners, the gold miners here in XME. I've been warning them now. I don't think you want to be a player. COPEX. Okay, falling back to the 18-day average, but so oversold I wouldn't do much with that market. Trend is down. You're into an area where you got to prove you can stay under all this. If the market clears this high, it's back to neutral. Right now, do I think an oversold condition attracts new sellers? The answer is no. Then TLT. Now you got an outside day down. Unless and until today's high is taken out, I look for the market to slip back a bit right here. Last in FXE, any move up and over now, and I would view this 108.18 and closing over 108.10 would be a short-term signal that this market actually wants to pick up and maybe run to 108.74. In the meantime, I'm Ira Epstein. I hope you enjoy this, what I'm doing for you. A lot of people would not do this when they're on vacation. I am, and I'm going to keep doing it unless I go fishing, whatever, and that does happen. You have a good day.